morning. So, bit of no major headlines, but Chinese data came out yesterday. It was flagged yellow, so minor news, but it was a big major miss, and commodities got absolutely smashed on the back of that, although we'll have a look at oil. Earnings season's coming towards an end in the US, and the Fed have said that maybe rates have peaked, but higher for longer. So bonds yields came off a little, but with the stocks getting smashed off the back of Chinese data, the US dollar became an asset to buy in terms of protectionism, so some safe haven flow into that, and also went into a bit of Bitcoin. But speaking of earnings seasons, this happened this morning. Banks, $10 billion profit, that's a record. And cash profits of 6% to a record of 10 billion. And people have been saying, oh, the banks are going to be doing it tough as interest rates go up. And we're behind the yield curve against the US, which means margins are getting thinner, and they mention margins are sliding, but even with sliding margins on funding, they're still funding costs, they're still managing to record a $10 billion profit. Crazy. And yeah, I guess the government not going to do that, use it. Anyway, I won't get into politics, let's get into the charts. So we can see the bonds there off somewhat, that's the 10-year, and the 2-year also off somewhat. Australian bonds, we just to have a look at it, tracking the US pretty much step for step, but just a full percentage point lower. We've got a bit of a gap down just before the close. Where did I want to go to? Commodities. Here we can see copper, that's the big one off the Chinese news. We can see the commodity index there, the Bloomberg commodity index down, gold is down, iron ore is down, and then oil was down. But if we go and have a look at a 15-minute chart, we can see oil was down significantly, but then just rallied throughout the US session. Not sure what that was for, but that's going to be inflationary. No matter which way you look at that, higher oil prices is inflationary. So rates higher for longer. And that brings us to stocks. We can see weaker but rallied into the close. You can see that there. Bit of a, I guess, a short squeeze. And dollar index, as I mentioned, did pretty well throughout the European and the US session as it rallied on a bit of safe haven flow. Aussie dollar got spanked off the Chinese data, managed to come back somewhat, but still down around that 65.5, and I would expect it still to be stuck between 66 and 65 for the rest of the week. I mean, we've got Chinese inflation and US inflation numbers, which may change that picture significantly. Outside of those data points, 65, 66. So we've got Chinese inflation in a couple of hours, and then US inflation tomorrow night. So keep an eye on those for your Aussie dollar trades. Euro dollar was looking good. Had an inside day on Monday. Couldn't make a new high, and now it's made a lower low. So to me, it's now just, there's no direction whatsoever. It hasn't breached that Friday's high or low yet, so it doesn't give us any indication of where the market's going to be going from here. And pretty much the same story with the pound. Did make a lower low than Monday, but it's still inside Friday's range. So again, that doesn't give us an indication of direction. And yen, well, we know the weaker yen, that's the BOJ play. Even though they've said the line in the sand is 145, their latest meeting when they've adjusted the yield curve management, we're going to be seeing that 145 tested and most likely broken. And that's it for the day. We'll be back tomorrow. Stay safe, trade accordingly.